Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES opened on a large gap lower in Globex, but responsive buyers were active and dominant throughout the session and pushed ES back into last week's range. At this point, heading into the open, the larger time frame bias continues to be bearish, but off the open, we'll be watching the pre-market support 49.5 to 50.5 and the initial support zone at 45 quarter to 47 quarter. Now, how the market reacts to those two zones will help us figure out whether the market is simply bouncing within last week's range or if we are breaking below that range, in which case we can go down and test 38 to 40, the overnight low, and potentially even 30 quarter to 32 quarter. And then we have pretty strong support at 23 to 26. So those support zones towards the bottom at 30 quarter, 32 quarter, and 23 to 26, those are larger time frame support zones, and responsive buyers can be active there on first test. Essentially, that's what happened in the overnight session is that ES opened on a gap lower, but very close to some key support areas, and we saw responsive buyers jump into the market and push ES back into last week's range. So at this point, heading into the open, the overall bias remains bearish, but short term, if the market starts to stabilize here above 45 quarter to 47 quarter, and especially above 49.5 to 50.5, then there is potential, at least in the short term, for the market to head higher and retest the 57.5 to 59.5 area. And then a break above that would bring the lows from last week, Thursday and Friday, into play, which are 62 quarter, 63 quarter, and then the primary resistance on the day time frame is 67 to 69.5. So that initial resistance zone is a potential target if the market starts to stabilize and we're actually holding above 49.5 to 50.5 and we're seeing some upside momentum. So the internals, as far as the advanced decline goes, we're opening on a fairly large gap lower, so it's a given that the AD line is going to open pretty weak, especially considering the weakness in the Russell. So it's not really going to provide us with a whole lot of edge off the open, at least not the absolute value of it. So in an environment like this, you want to focus on the trend of the advanced decline, and even that is questionable on how valuable it's really going to be because it's kind of a lagging signal. So this morning, keep an eye on the NYSE tick, be more focused on price action, but you do want to see that upside skew on the tick if the market is to go back up to 67 to 69.5. And then also understand that this is a news-driven market. Right now, any news out of Europe can drive the market higher or lower on the smaller time frames, and that means added risk, especially when you're day trading and using a 2 to 3 point stop loss. Just the volatility alone can stop you out if some unexpected news hits the wire. So it is better to be a little bit more cautious today. Don't expect a repeat of last Monday, given the strength of the buying we've seen so far in the overnight session. I don't think that today is going to end up being a trend down day. I think even if we end up failing here and going lower, it's going to be more of a balancing type session where we can still get responses at the support zones. We can still balance within a range. So this is not the same as last Monday. Last Monday the market broke down below a fairly mature and large balance area, and the trend was clearly to the downside. Today, we opened below last week's range, but then quickly shot right back into it, which tells you that the market, even though is overall weak, it's not so weak that we're going to trend down from here. So you do have to be a little bit more flexible this morning. Last Monday, our bias was clearly bearish. Our focus was going to be purely on short setups. That's not really the case today. The short side can still provide very good edge, but we do have to balance that view with the idea that the market is trading within the prior week's range. And if we stabilize here and we start holding above pre-market support or initial support, then the responsive buyers can be active and we can get pushes higher as well. So be careful in the middle of the range on a day like today, because when you're balancing and just kind of going back and forth, the middle of the range is a very risky and choppy place to initiate a trade. It can be used as a target on trades, but as far as entering a new trade, that mid-range is a very risky area. So be cautious over there. If there's no clarity in the market and it's just kind of going back and forth, then just wait, right? You don't have to put the trade on. Wait for good trade location. Wait for some clarity on which side is really dominant on the day time frame. So we know that on the larger time frames, the sellers are more dominant, but on the day time frame, the market can still go back up to 57.5, 59.5, 62 quarter, 63 quarter, and even 67 to 69.5 if we start getting some decent upside momentum. So today could be a fairly balanced session. It's just a matter of where the market's going to balance. And if we're holding above pre-market support and we're seeing upside momentum, then it can balance still at some higher prices within last week's range. And then if we fail at pre-market support and initial support, then perhaps we can balance at lower prices. So that means that buyers can still be active on first test of 38 to 40, the overnight low, 30 quarter, 32 quarter especially. And in the event that we do go down to 23 to 26, that's a very good spot for larger time frame buyers to step in, and that can even be a reversal spot on the day time frame. Right now, that zone is not immediately in play. We're still trading in the 2050s, but if we go down there, then that would be a good spot to actually look for a long setup, as long as we're not in a complete trend down environment. So today the view is different than last Monday, and we are expecting a bit more balance rather than all-out trend. So that means we can't just be solely focused on shorts. We can take shorts, just not super aggressive ones where the responsive buyers can step in and quickly just push the market back up, and a small rotation can stop you out. So you do have to be a little bit more careful today compared to last Monday. So those are the main ideas heading into the open. Let's keep an eye on pre-market support, initial support, see if the buy side's maintaining control. Keep an eye on the overnight balance that's developed up here. And, if we get a balance breakout above 57.5, 59.5, that can take you up to quite easily 62 quarter, 63 quarter, and even 67 to 69.5. And then sellers can still be active at that resistance zone up there. So those are the main thoughts. Let's see, which way this balance tips, and we'll take it from there.